Shares of warehouse REIT Prologis down 25% year to date. But our next guest says the name can bounce back. Malcolm Ethridge of CIC Wealth is stepping up to the mound to give us a fast pitch. So, Malcolm, in this environment, this inflationary environment, you say this is a good hedge. Why?
Yeah, I heard you mention that it's been beat down quite a bit going into the break. But for anybody who's in the real estate space, having the type of pricing power that Prologis has right now is a dream, right? So for mall REITs and probably office space REITs, now's not a great time to be in the space. But for somebody who's in the warehouse and distribution and logistics space like Prologis is, it's a dream. They're doing everything they can to keep from committing to long-term leases at this point with the tenants that they're signing today.
So explain to me how the contracts are different for, let's say, a mall REIT and a REIT like Prologis in terms of the length and the type of customer. Is for some reason this customer, I mean, do they have longer contracts so it's harder to get out of them?
Well, normally in a commercial lease, you're going to go somewhere 10, 20 years even down the road on some of these leases. And they're going to build in what inflation, an average inflationary target for that entire 10 or 20 year period into that contract. And so you're kind of capped on how much you can expect to receive each year in addition from those tenants. But now Prologis is offering something like 5-year on average leases, and people are taking them simply because warehouse and distribution space is so hard to come by. And so they have pricing power right now simply because the supply chain, it's still broken. Those same air, freight, and sea shipping issues that companies like, Dick's Sporting Goods, Home Depot, Amazon, those are all customers of Prologis. They're still having those exact same shipping problems they were having, at the beginning of the pandemic for the most part. And so it's just a seller's market, I guess, in this case, or a landlord's market as far as Prologis is concerned.
Hey, it's Karen. Thanks for coming on. Let me ask you about Amazon has talked about maybe a little bit of indigestion in the distribution center. And I wonder, how does that affect Prologis? Do you see it as a blip, or how do you think about that?
Yeah, so Amazon, I think, is guilty of overbuilding, and it's a little bit of an outlier, I would say, in the sense that Amazon had the ability to go out and build their own fulfillment centers in addition to leasing spaces from someone like a Prologis who also is going out and building them and then finding a tenant to take them up on. So Prologis is going out and building on spec. Amazon also went out and built their own fulfillment centers, somewhat on spec. I know they're very heavy on data, so they probably had some very good indication of where the pressure points were. But I think Amazon is a bit of an outlier because they just got a little bit too far out over their skis trying to scale up to the demand that we now know was very temporary.
Steve Grass's got a question. Steve?
So, Malcolm, it sounds like the supply chain issues that we're dealing with right now are a big part of the tailwind or the bull thesis on your part. If that frees up, do you lose your bull thesis?
We probably would, but the challenge to that is that a note that came out from Bank of America early in this year estimated that it would take something like $1 trillion spent over the course of about 5 years for retailers to onshore the first half, of the supply chain that gets built in China right now, China and other places, but primarily China. It's very unlikely that in a down market like we're having, we're talking about recessionary times now, we're talking about cutbacks and layoffs and everything else. It's very unlikely to see those kind of capital expenditures from those same companies I just mentioned, your Dick's Sporting Goods, Home Depot, and the like, who are going to now go and build the facilities necessary to bring those items onshore to not have to have the type of logistical nightmares and the fights over shipping containers and all those kind of things that they're currently experiencing.
Malcolm, thanks for coming on the show. Malcolm Ethridge, CIC. It is time for us here to vote. So are you buying Malcolm's pitch on Prologis? Guy Adami, you have your whiteboard already?
Yeah, well, I do. And can you read my smartboard, please, there, Melms?
Where is Tim's smartphone? Is that what it is? It's fading. You need a new marker.
Smartboard. Where's Tim's smartboard? No, I'll just tell you, because I know Tim wasn't paying attention. I'm just calling him out right now. I brought mine with me. I'll say this. They reported a really strong quarter, April 19th, I think. Jim Cramer had the CEO on the next day. $18 billion of liquidity on the balance sheet. The stock has sold off from that double top. I like this power pitch.
So you're a buyer. Tim, do you have a smart board?
Hey, Chief, I got a surprise for you. Look what I found in my closet. And in fact, it's my smart board, and it says, I'm begging you, because Guy was begging me on the call to find my smart board. And nice job, Malcolm. Very, very thoughtful pitch. I think some of the issues we talked about Amazon, also the attempt at buying Duke, the Duke REIT, is I think tactically you have a buy opportunity here. I'm not sure you want to hold this one forever, but I think the stock's beaten up.
All right, 2 buys so far. Steve, what do you say?
Yeah, technically, I'm going to go with a buy as well. Technically, it's right at that October 2021 level, which is it's got to hold $120. But he did alleviate my concerns that if the supply chain does free up, he still has some time here on his bullish thesis.
All right, Karen, what do you say?
I went with a pass, and it wasn't really so much about for me. I'm not a trader, and it seems like an interesting trading vehicle here, so I went with a pass. I wouldn't short it for sure.